Hi, this is Mike with Rags Riches Trading. I'm going to take a look at the September trades. So September was actually a very good month for us. If you can remember, it was actually a horrible month for the market. I think the NASDAQ was down 12 or 13%. All the major indexes, I think, were down in the low double digits. So one of the reasons why we were able to do well is we did not trade a lot in the month of August. So August was a very good month. Volatility was very low. So that's a time when you don't want to be putting on trades because, usually things revert to the mean. So when things are going up a lot, that means it could be followed by a down period. So we traded light. A lot of the trades were only really in like the gold mining sector because the strong dollar really hurt gold. So if you want to take a look at that August video, you can to get a recap of that. So I'll kind of start things off here. So in the beginning of the month, you'll see I did sell a put in Intel at $26. Strike price made $11.33. That trade was actually challenged, and I did make a separate video there where the price dropped below 26 to around the 25.85 price, and I ended up having to roll the position. So I did lose about $3, but then I recovered it by selling a strike further out. So the next trade you'll see here is Newmont. So that's just the gold trade, expiring worthless, exactly what we want to see. We want to see that price finish above that 37, so we keep all that premium and don't have any obligation to purchase the stock at $37. Hewlett Packard is it's a printing tech company. Very good balance sheet, very good earnings, so I feel confident selling puts in Hewlett Packard down at the 23. Strike price, once again, we're selling these 20% out of the money. Ciena, a chip company, on the 16th. So you see there's kind of a very slow in the beginning of the month because September didn't start off with a crash. It kind of took some time. I know it did have a big 1,000 point down day, but that just kind of brought down some of the uplift we saw earlier in the month. So Ciena on a $35 strike price, 32. That's a pretty hefty amount of premium there. And then we have the trade in Ball and Newmont expiring worthless. Another trade here on the 19th in Western Digital, $29 strike price, and made $23 there. So they're a storage maker. You'll notice a lot of these trades are tech companies. So in September, it was the big cap tech. I kind of call this like the old school tech. These are all kind of old tech names, semiconductors, chips, things like that. Really took a beating. The only non-tech stock you'll see up here is Halliburton. And then Micron, got a hefty amount of premium here, selling the October 21st strike at 40 for $48. So this trade was actually a little bit risky because he did have earnings coming up. So that's one of the reasons why the premium was so high, because there's a lot of fear around earnings, because a lot of times if you have bad earnings, a stock like Micron, could take a 15-20% hit in the worst case. I do remember in the summer they did report earnings and they got it significantly, but it's kind of priced into the stock and it really didn't drop. So maybe that gave me some confidence to put this trade on before earnings. Then you'll see I took another trade in Hewlett Packard as it continued to go down. But notice I'm always going down to that strike. So here the strike is $21. Back here it's at 23. So as Hewlett Packard goes down, I'm continuing to sell that put 20% out of the money to make the trade as safe to me as possible. Then you'll see on the 26th I made a trade in Halliburton. So the oil market had been getting just hammered. There was a lot of fears about economic slowdown, excess oil. So Halliburton, I sold this put, and this is probably more than 20% out of the money, but at only $18, you're collecting 23, or an $18 strike, you're collecting $23, which is a significant amount of premium. I actually did take this trade off early. So oil had been down about 7 or 8 days in a row, and then it kind of reverted back up again, making this position worthless. And then I would just buy that position back at a profit, and then deploy the funds elsewhere. Then you see I sold a spread in Taiwan Semiconductor. So what I did here was I sold the 42 or the $55 strike, collected $42, and then bought actually the $50 put, and I actually had to pay out $20. And I just did this to limit the downside, preserve the capital, because as I'm making more trades, right, I am consuming more of that buying power, digging into that reserve. So this is one way to protect yourself on the downside, right? So the the most risk here you have on this trade is $500. You can only have a $500 loss here. And that's what you get by purchasing that $20 put here. So that trade ended up doing well as well. And then here's the Intel trade. So here it is where I have to buy it back at 14 cents. So you see, or $14. So you can see I sold it at 12 here, and I actually had to pay more money. So here you can see I got in 11. I had to buy it back for 14, so I lost $3. But I did roll this position, and I made a separate video on that, so you might want to kind of take a look at that video to see what you want to do if you do sell put and it does go in the money and you don't want to own those shares. But I did sell the $25 put. The next week, in October 7th, Intel finished above that, and I was able to keep this premium. So it was a good way to work out of that position. So that's a recap. I think the lessons from this is you want to really manage your size when the market is going up, right? Do not put on a lot of positions and really wait until that sell-off really intensifies. And you can see, if you look back at a chart, you'll probably see a lot of down days, a lot of red, and we're just kind of selling into that red. One tip for if you're watching these videos, you might want to get out your cell phone and kind of look at a quote at when these positions were sold. You'll probably see the stock is kind of like in a nosedive. It's kind of almost like running into a burning building, to use kind of a metaphor there. So thank you for watching. Hope you learned something. Leave a comment below. Bye.